Well, it's been approximately 11 months since we officially launched HBB Biotechnology to external clients back in February of 21. And I thank all of you for entrusting us with your investment over this period. Looking back at 2021, it's certainly been a very difficult year for biotech, with our index retreating over 20% during this period. Now, there have been numerous factors at play during the year. Firstly, as economies opened up post-COVID, generalist investor funds have been flowing out of risk assets, such as biotech, and into cyclical assets. Secondly, it also didn't help that during the year, there have been fears of drug pricing reforms in the US under the new Biden administration. The good news here, though, is that this new legislation is now a known entity, and we now know that it'll have very little impact on the sector, and even less so on our target universe of small to mid-cap biotechnology companies. The third major factor related to the generalist fund outflows has been the prospect of rising interest rates and inflation. Now, we can argue the toss as to whether this should have a material impact on fundamental value of a biotechnology company. I don't believe it does. However, the net result of all of these factors has been a global biotech market that has been driven mainly by macro distractions rather than long-term fundamental value. Notwithstanding this challenging environment, all of our client portfolios have outperformed the index net of fees during the period. Looking forward, we're very upbeat about the prospects for 2022. For starters, since the biotech index has launched, there have never been two negative years in a row. And secondly, history has taught us that when there are years of negative index returns, it's typically followed by a very strong recovery. And thirdly, in 2021, we saw very little M&A activity across the pharma sector as a whole. Helped in no small part by the windfalls from things like COVID vaccines, there is an estimated 500 billion of dry powder sitting in big pharma coffers ripe for M&A activity. And with currently suppressed prices in the biotech market, we would not be surprised at all to see M&A activity pick up during the year. Now, while we don't know the exact date a rebound will occur or by how much the overall market will rebound when it does, history has taught us that when sentiment does change and the rebound does occur, it's usually quite rapid. So in terms of investment trends, oncology or cancer continues to be a large driver of biotech investment, and this is also reflected in our current portfolios. Our current oncology interest has been in areas such as synthetic lethality, novel antibodies, and immuno-oncology. During the year, we made our first investment in the very exciting field of targeted protein degraders, an emerging therapeutic modality that has the potential to drug the undruggable. This approach utilizes the body's native protein expression regulation system to selectively degrade disease-causing proteins. More advanced companies in this field are already in the clinic demonstrating an excellent safety profile and proof of engagement with their targets. 2022 is certainly shaping up to be a very important year for the clinical validation of this very exciting field of novel drug development. You've probably heard of CRISPR as it relates to gene editing. We're keeping a very close eye on this area, but treading very carefully as well due to the high expectations baked into current valuations. While this technology promises to treat previously untreatable genetic diseases, there have been a raft of issues to do with viral delivery methods and off-target edits that warrant caution. So as always, if you're interested in learning more about our approach, how we construct our client portfolios, or more about our investment philosophy, we'd be more than delighted to take your call.